we, of course, we made it happen, hustled and everything, but it made me realize that I'm not in control.
Mm-hmm.
And definitely nobody's in control of anything technically, but as far as, in the corporate world or your job and everything. So subsequently, years later, which is about 2 years ago, I got laid off again. But this time I was in a better position, meaning a little more confident in, just the outcome. Especially, by then my husband and I have grown, we're working and all that stuff, but there's an element of still, not being in control and working for somebody,
Right.
So we have invested, I think in 2003, we invested in a rental property.
Mm-hmm.
How did I get into that?
Yeah, I was just going to say, what was the decision?
How did I get into that?
Yeah.
I was pregnant and, back then they had the infomercials, and I don't know if there's a guy called Carlton Sheets. And I bought his tapes back then. They had the photos. And so this was before I got laid off, and I was watching, like on my way commuting to work, I was listening to his tapes on the bus, just listening to his tapes and everything, Carlton Sheets, and all about, real estate investing and understanding the expenses and cash flow, just generally. And so back then they would give a loan to anyone, right? Didn't really have the down payment, and made lots of, mistakes. And that's one of the things I love about real estate is that you can make mistakes can be really bad if you're not careful, but you can it's still time adjust through things and it will still be okay, So
I think it gives you an ability. I've never heard of anyone who's become successful that didn't make mistakes.
Yeah.
And so what's interesting is that you're saying that there's time to adjust, and there is.
Yes.
Especially, you not only had the learning from making a little bit of a mistake, but then there's also, you have other advantages within real estate. So it's a hard asset. There's going to be some value attached to it. It's not going to deplete or go down to zero or negative.
Right.
You can lose money in real estate, and I'm not going to lie about that.
That is very true. You can
always
lose
risk.
Yourself. Yes. And, back then they were giving loans to everyone. I would say then, it's not like we had enough capital to put down. We didn't have the perfect credit to put down, but lucky for me, that was an opportunity and we jumped in. And, we kind of just was throwing our money both into when we now moved into, because we were in an apartment, right? And we bought a rental property.
Mm-hmm.
The first house we ever bought was a rental property. And then
I love that.
7 months later, we bought the house, which we're staying in right now. We bought this house. And, we're working, and my husband, was saying, the biggest bill you have is, where you're staying. And we kind of have the same agreement when it comes to not liking that we're paying for it, but it's great because the rental property, somebody else is paying, the mortgage down for you. But for our primary home, like Robert Kiyosaki says, that is not an asset, right? You're paying your own money. So
exactly. Well, what's interesting is you're not the only person. I've heard so many times over saying, what was really important to create in your life was cash flow and financial freedom. And you mentioned the lack of control that you felt with the layoffs. And you're saying, okay, how can I get into a position of control? And just having a bigger house clearly does not put you in a position of control. But you said, hey, how can I buy a house that's an asset that's going to produce cash flow for me?
Exactly. Yeah. And, my personality is such that I do love to research the hell out of things, and look for things and understand things. And I am a little bit more of I'll say a little bit of a risk taker a little bit, I like to think I'm doing a calculated risk. Doesn't always pan out that way, but I'm more likely to kind of jump, I would say. So, through it all.
I think with that, and I don't want to cut you off because I don't want you to lose your train of thought, but I think in terms of calculated risk, you definitely do a lot of research. And so when you do move forward, you're saying, okay, I've looked at the landscape. I understand the decision I'm making, but you still have to move forward. You can't always do what everyone else is doing and what you've always done if you're going to have a different kind of result in the future. And so I think calculated risk is a really wise way of putting that, but you're also somebody who's willing to say, I'm willing to do things differently so I can get a better result.
Right. And, for me, because I think the other episode you had about retirement, I think you've spoken on your podcast about retirement and all that. I personally don't, I'm not really ever looking as far as retirement or have some thing. So what do you want to do? I'm still trying to figure things out, to be honest with you. I like my job, but I know that it could be gone like that. And so I like to travel. I like to spend time with my kids and do that. So the option and the choice is what what we are working towards, as far as understanding, okay, I could choose not to work this time, or I could choose to take a longer vacation, or I could choose to do this and that. So which is the piece of the journey of trying to figure out cash flow. It was in my, okay, so fast forward, the rental house, and we just decided, my husband and I decided we were going to just plop all our money into paying down our primary home. And then because you can have mortgages up to 10 of one person, that FHA, you can have up to 10. But, with other responsibilities between our parents and all the other things, because we have family that we need to take care of and all that. It's one of those things that for the money you have to figure it out to how can this one money do a lot of different things, and how can I still live my life now? I would hate to get old and then you've reached your life now, and now you don't have the energy to do the things that you want to do. So
Yes.
that's where my husband we always have these kind of conversations about that. So we plopped money down in the house. So I think I had gone and, done a few videos, and I can't remember what video. I think it was, I don't remember which channel. I think it was VIP Financials. It talked about infinite banking. I was like, what is that? Privatized banking. So that got me searching. I was looking for ways to build business capital. I was looking for ways to continue to multiply on properties. I had just started because I travel. I enjoy my trips when I travel. I love Airbnb. I was starting to think, okay, I was probably one of the earlier users of Airbnb. So I started to dabble in, do I move from long-term to short-term rental investment? So those were the things, and understanding you have kids that are, soon to be off in college, and we're still trying to figure things out as far as, what are we going to do and stuff like that. So just trying to figure out capital. Where can we get capital where we're not using completely all that you have? You can, but what piece to add to getting more capital. So that's when I fell into infinite banking, and I started researching on Nelson Nash, and then I stumbled. You when you're on YouTube, you're just looking, you gravitate to different people. Yeah. Everybody's kind of saying the same thing, but some people say it even better. So it's one of those things you keep on. The more you listen to it, the more you hear it. The more you listen to it, the more you hear it. So I was listening to a podcast. It's actually in the shit. It's Cash Flow Ninja. Yeah, that's a guy called Cash Flow Ninja. He has two podcasts. Now, one of them that he had was talking about, he talked about the history of money, and the fiat currency and all that stuff. And then eventually, just talking about, it's, how, it's, you are the asset.
Yes,
and so
absolutely.
That's what he said in the last part of the podcast, that you are the asset. And it just got me thinking about infinite banking. So, how we're talking about the asset as the rental company, as the rental properties and stuff like that. But then getting the infinite banking, I am the asset that I'm investing in. Yes. That's the way I read it yesterday. Yes. So anyway, I find your YouTube channel, and you had a series of videos that kind of just explained it even more in a way that I liked. So I kept on watching you, and I think you had taken a break a little bit. And then you came back, I think you switched YouTube channels, and then you started the podcast. So then I just moved on to just listening to you on the podcast.
And I want to point out that this is over 2 years ago, because we've been live on the podcast now for 2 years. Yeah. And so this is quite a while back that you not only our old videos, which was, So
I had been researching it for that long before I called you last year or so. It's been over a year, and said, okay, this is what I like to do. And I like it now more. I mean, when I was talking to you and Bruce, I think it's true because it really is like a layering, like onions. Like every day I'm peeling back and I'm understanding, wow, this is a lot more, than I ever thought. I like
Mm-hmm.
the idea of having a life insurance that you can have the high cash value, and it's really, you're just like, putting the money in there and you're able to pull it out. And, going through and buying all, because since then we've gotten quite a few more properties,
Mm-hmm.
and of more recent, trying to get out the cash of the house that we literally is our property now. I
Right.
can't tell you how much hoops that I have had to jump, especially when on the banks, they see all the mortgages, right?
Mm-hmm.
The mortgages you have, so you're having to show more reserves.
Yes. Yes. So
So
not
you
being
have
able
to
to
show more
lend as
reserves.
easily. Mm-hmm.
And I had just started with you guys on the policy, and it's interesting to me. I had just started you guys. I think it was about 6-7 months into it,
Mm-hmm.
and it's, I was like, wait a minute, you have the so, the bank was able to recognize that as assets as well,
Yes. So
so
I'm
that
going to back up and just share kind of a little bit about what you're saying here. So
yeah,
what Nnene is talking about is that within a whole life insurance policy, especially one that is specially designed, you have cash value that's building and growing alongside of this death benefit. So yes, you have a life insurance policy, it's growing a death benefit, but you also are saying, hey, this cash value is extremely valuable to
yeah,
you specifically as this store of capital. You were talking about building business capital
right.
or real estate. And what was interesting is that you're contrasting the difference of accessing the capital inside the privatized banking policy versus what it looks like to try to access that capital from getting it out of your mortgage or getting
Yes,
it out of the house, or we call it in the four walls of the house. So if you
yes,
pay down a house, you're in a position where you're putting the equity into the house.
yes,
And now, in order to get that, you can't just say, well, hey, I've got $200,000 in my
yes.
house. I want to get it out.
Can't you?
You have to qualify.
Yes, yes. So
So,
it's funny because I remember when you and I started talking, and Bruce was like, "Oh, all that extra money you're putting down into the house,
mhm.
we could put it." If there is one, and I don't like to look into regrets, or if there's one, and if he's hearing, he'll probably smile and laugh at that. There is one regret. It would be that I wish, if I could, I wish we didn't put it right way into the house. I would
Mm,
have preferred to put it into, because we did all that and we're like, we've done it,
yeah.
we've paid this stuff down, this is our house. So now you want to remodel, or you want to do, you want to go ahead and um, travel, or whatever it is you want to do.
Mhm.
In our case, we're investing more in other, rental properties, and it was oh my gosh, it was it was a lot of hoops, and I think it wouldn't have been as probably difficult if we hadn't had like other mortgages and they were clearly cash flowing and paying for itself and all that good stuff. So
Mm,
it
so good.
was a lot of jumping hoops just to go through the banks, just the bank I was working with to show. And that piece came, okay, now we have everything. Just because it's going to be an investment property, you need to show X more times more than the
Mhm.
normal. So then for us to get a certain percentage off of your equity on your primary home. So I
Mhm.
was like, well, I do have something to show, and that has been really helpful. So
And I want to point out
it,
something interesting with
yeah,
that, because we talk about having the cash value inside of a policy means
right,
that you have the guaranteed ability to borrow against that particular policy by taking a policy loan. But that's not exactly the only way to use
yeah,
that asset as
yeah,
leverage. So you have this cash value, however much cash value you have inside the policy, you can
right,
go to the life insurance company and you can
right,
borrow against that cash value that way. Or
yeah,
sometimes the bank will say, you have this asset, this is cash
yeah,
value. It is liquid, available cash that's safe, it's not going to drop in value. And therefore,
yes,
I will give you a loan or a lien against that cash value inside the policy. So you can go to multiple financial institutions and use that same cash value as a leverage.
Yes, yes. And it's funny because, you know, and the other piece to it when I was researching, I was like, well, it's still a loan. It's still a loan on the policy. You remember I asked that question. I was like, well, isn't that still a loan? But of course, you are still paying yourself, right? You're making this
Mm-hmm.
continuing to grow while you're, you know, having that cash value in the policy. And
Mm-hmm.
even looking at the interest rates, even with over 700 or whatever score that one will have, when you have an investment property, it's still going to be a high interest rate than a resident, like somebody's primary or secondary property, you know. And then
Mm.
once you get into the investment interest mortgage rates, then there's a level of, okay, where's your score at, you know. So don't get me wrong, these are the best times to refinance because never has it been lower. But I do like the idea of using it for investments property because, you know, at the end of the day, you've got the tenant, or if it's an Airbnb, you've got your guests that are helping you pay down, whether it's the, you know, the policy loan, you know, or whether the piece, if you were to get the policy loan off of that, including the mortgage. So it's really, it's just, it's a really good thing. I like it. Yeah, definitely.
I love
Definitely.
just all
Yeah.
of the elements that you're
Yeah.
pulling together from this. And I want to actually go back to something that you said. You mentioned that you wanted the control, and that's why you were wanting to invest in real
Right.
estate. And then because of the research that you were doing, you were coming across this idea of, I am my own greatest asset. And that is something that we would 100%
Yeah.
endorse and agree with,
Yeah.
because if you are in a position where you're growing your mindset and
Yeah.
you're growing
Yeah.
your capabilities, because you're not staying fixed at whatever level you were at before, but you're saying, okay, I want to increase something in my life. I want to have more financial freedom. I want more time freedom, which I heard you mention as well, more control of my time. If I want to get there, I need to make changes in my personal life. And because of the changes, as I expand and grow, then I can produce more. I can do more things because of what is my up-leveled mindset. And so you committed to doing that. And then what was really interesting is that you were talking about the infinite banking, which is privatized banking. Is the same
Right.
name for the same product, which is specially designed whole life insurance that you're able to then use to borrow against, and you can invest in additional cash flowing assets.
Right.
What's interesting is you were saying it wasn't even as much about product as it was about your mindset and
Yeah.
your ability then to think about, how can I get these dollars doing as much as possible and maximizing the use
Yeah.
for me. And you were saying, how do I not just have my dollars do one thing, but do
Yeah.
multiple jobs? And I think
Yeah.
those are some really clear, really,
Recycling of money. Recycling of money is what I'm trying to. So it
yes.
switched my thinking to, is pretty much, and I don't like to compare it to HELOCs because it's not, but it switched my thinking to you know, just recycling of money. How is that going to be? If I'm taking off a loan to paying it down, how can I, you know, reuse it again and put it back? And I think that the kicker, yeah, I mean, it's great for personal use or anything that you want, because if you're still going to go out and take a loan, a car loan, or if you're going to do whatever the situation is, just any, you know, consumer debt is still
Mm-hmm.
better, I think, in my mind. But definitely just having somebody else still pay it down for you,
Mm-hmm.
that piece is still really good, you know, as well. And you know, the life piece of it, the death, you know, it's
Yes.
funny because, you know, the older I am, so happy that I figured this out. Because I had term, by the way, I had the term,
Uh-huh.
you know, if you remember, I had a term life, I
Mm-hmm.
still, you know, like term life insurance. And if I think about the monies, I mean, even if it was, because you're younger, a term is much less, you know, when you have a term for 20 or however
Oh, sure.
years
And
life
especially if you
insurance.
put it in place
Yeah,
at
but if
like
you add
20
up
years
all
old.
that,
Mm-hmm.
right, that you're paying, like, I think it was $30 or something like that, $40 a month,
Mm-hmm.
you know, for like a 250 policy,
Okay.
which
Yep.
it's coming to expire like in the next 7 years, 5 years. Why I canceled mine. There was just no
Uh-huh.
point at this, you know. So especially when I moved over to you, so you're paying that, what, $30 for like 10 years,
Mm-hmm.
11 years, you know, to think about the concept of, if I had, you know, put it into, and I know they have other types of permanent types of insurance, but this
Mm-hmm.
whole life piece of it, putting it in there, thinking about all the extra savings that that you have, and adding it all together. I liked how you guys kind of worked with me and saying, okay, where are all the leakages, where those leakages, because those leakages plus the ones you think you're saving and all that stuff, you can put it in this, and then you can always kind of recycling it through.
Well, you are just,
I like to think about like hacking, because I do like travel hacking.
Yeah.
So I do credit travel hacking as well. So I like to think of it in that way as well. So everything I'm trying to do is just figure out how to hack it, pretty much. That's what I'm trying to do. Because, and then just, to allow you to live the best that you can, So it's a work in progress. We'll see.
I love just all the ideas that you're bringing to the table. And one thing that you're talking about with the term insurance versus whole life insurance, the interesting thing is you touched on this idea without maybe saying these words, but there's an opportunity cost of every place that we put our dollars. And so if you put dollars in one specific location and that's not going to turn any benefit for you, you're in a position where you could have potentially put those to work somewhere else. And what's interesting is term life insurance can still be extremely valuable, because if you want to get up to your human life value, maybe you can't put enough capital into whole life insurance to be able to get up to the right amount of death benefit for you. But the challenge is with term life insurance, most of those policies don't pay out. So it's like about 1%, because most people put them in place when they're young and healthy. And of course their life expectancy is much further past that term, and they're more likely to just outlive the term policy. And then it has been just a cost only to you. Whereas the whole life insurance is this place that you're storing capital. It's a savings tool. It has the life insurance element as well that's going to pay out whenever you pass away. And so it's this permanent long-term product that's doing a lot of jobs for you.
And I'm really happy we got it at the time, because that's all I knew at the time, and I was young kids, we have young kids. And so for me, I felt like anything would happen, at least we had that. But I'm also glad that, that my eyes and ears appealed to looking and researching things to be able to find this and to dig deeper. Again, it took me a year and a half, 2 years before I actually made the leap. And probably should, but that's just what I needed to get comfortable, But what I like is that I got there right on the time, because thinking about if I'm 50 further down years, it costs you a little bit more to get that whole life, insurance with you guys again. Who knows, maybe, I God forbid, but I'm trying my best to be as healthy as possible. But you don't know, what's going to happen further down, So that's why I like that I got this going like right now, then versus, let's say right now, at least in the past couple of years, then versus further down into the line, So,
I love that you did and made that leap. And what's interesting as well is that I would say to somebody who's listening, it's never too late for you to be able to make these changes. You might be 22 years old and saying it's too late and I should have done this earlier. You might be 58 years old and saying, oh my goodness, I should have done this earlier. You might even be past that. But the point is, take the information that you know right now and make the best decision that you can with it. The other thing that's interesting, not only does the cost increase over time. So say you were going to get a whole life policy that was, say, a $500,000 death benefit at age 30 or at age 60.
Right.
Yes, have a higher cost of insurance when you are age 60. But the thing is that if you put it in place earlier, you have more time to go up that exponential growth curve.
Yeah, which is what, it's funny you said that, and I was talking to Bruce about this. This is what we're about to start off with my kids, start theirs. And I think it's because, my daughter just had her first summer job, and we just opened her as a bank, with First Bank. And, the combination of having a regular checking and savings account and teaching is the next thing, because they haven't quite finished it, but I've been forcing them to read Rich Dad Poor Dad.
Good.
I told my daughter that's, if she wants a car, that's what she needs to read, Rich Dad Poor Dad.
I love it.
She's like, but she's a big reader anyway. And then my son, he's like, I'm not really a big reader. He's not. So I had him do like Audible, and then we have the cash flow diaries. The reason why I say this is because the understanding of, because again, I'm still learning this stuff. I don't feel like I'm still trying to.
You're a lifelong learner is what you are. Yeah.
Yeah. So I'm still trying to, what I don't want is to not pass on the knowledge further down. It's very important for me to continue to pass on that knowledge, not having that financial education background. And, you know, I'm from Nigeria, so the way it runs there is completely different. So when you're here, you know, you're at a disadvantage as far as, I wouldn't use the word disadvantage, as far as what you know, the information you know, or when you come in, you're adjusting to life in here and trying to adjust and work and do all that stuff. That most times your circle may not know about these things. You see what I'm saying? So for me, what I don't want is to not pass on knowledge to whoever is interested, specifically not pass on knowledge to my kids, as far as, how can you still get a great education? That's what you're trying to do. And how can you bank your money? How can you use the bank? How can you use your policy, especially starting early, having like a policy early. And so that way, as they grow, whether it's college passing down, or whether it's the first house, or whether it's, they have that cash value that has been building, that they've already had an inbuilt growing. It's funny because, when you're straight out of college and people want to qualify for a mortgage, it's like, how do you qualify for a mortgage? How do you get, so that's for me trying to, I'm not sure how those things will be used, but at least planting those bases like right now.
Oh, that's so awesome. And I love that you're not only saying, okay, you're putting in a life insurance policy in place on your own life, which you could say, well, that's a legacy, because that's going to pass on to your kids at some point. Hopefully it's going to be when you're about 120 years old. That's how long, I want to live, and I hope all of our clients live as well.
Yeah.
So we know that that's going to be a legacy that passes on, but you're saying, how can I pass on this knowledge base that I have as well? And what's interesting is I hear this like-minded, almost a heart cry of every person that we have as clients, this desire to say, how can I not only just be a recipient of this knowledge and wisdom, but how can I be a conduit? How can I pass this on through me to the other people that I'm influencing? And I think it's just a beautiful thing that you are demonstrating that for your kids. And you're not just walking the walk and hoping that they'll understand, but you're telling them about the decisions that you're making so that you can truly pass on that legacy of knowledge as well.
Yeah, knowledge is power. It definitely is. That's for sure. Knowledge is power when, knowledge is power. You just have to kind of search for it, though. You have to really, which is why I'm so glad I kind of found your YouTube channel, and just since then it's been my goal, not just with that, just understanding the whole piece of that, combining it with other things that I want to do, just even starting a business, I'm learning more about you being able to have as a company, LLC, have a policy on that. There's just so much of depth that I'm starting to really understand when it comes to this. And I'm I'm really happy about it. It's very difficult though to explain, I have to say. It's very difficult to explain, I would say. But I'm really happy because I told my husband, I was like, that makes sense. He couldn't quite get the pieces, but he's like, it makes sense. Okay. So
what's interesting is that I think that
it makes sense. Okay.
I think what you're touching on something really important, and it's the fact that, all of the moving parts or not moving parts. There's not even as much movement inside of a whole life insurance policy as there would be in another type of investment, or in maybe an indexed universal life because there's a lot of complication with inside of that. But at the same time, when you're looking at what is whole life insurance and what does it do, I think the most important things are understanding the guarantees and the certainty that it provides. And what's interesting is that all of the inner fine workings of what's happening, some people need to understand that fully and some people don't. But what's really interesting is, as you see the guarantees on the guaranteed side of the illustration, you know that you're getting dividends, you know that you're getting paid out a portion of the company proceeds, you know that that's going to add on to your cash value, the cash value is never going to decrease at any point unless you physically withdraw the cash value or you cancel a policy, but it's not going to drop as a result of being tied to the stock market or something like that, because it's not. It's completely independent. And so what you're looking at is then a death benefit that's continuing to increase because of the dividends that are being paid in. And having a properly designed policy really just then gives you a lot of freedom to do other things in your life. And I would actually love for you to share just a little bit, as much as you're comfortable,
Okay.
because I think sometimes people have this question, like, I am doing all this research like you were. I'm doing all this research. I'm doing all the learning. I'm not sure my husband or my partner, my spouse is on board. And how did you navigate through that? Because I know that for you, it wasn't easy. And it wasn't that you guys were both
Right.
having the same enlightenment or awareness or research and understanding at the same time. And so you kind of were a leader in some ways as you were going through that. But can you just share maybe a nugget of wisdom for somebody who's saying, I'm interested in this concept. My spouse is not necessarily there yet. How do you figure that out and navigate it?
Well, it's funny you said that. He wasn't quite not on board, I would say. It was just his thing was putting the extras into that, the extra.
Right.
Yes. The extra monies, savings into a policy versus paying down.
Yes. Okay.
So he actually likes, policies a lot. And so his thing was that, which is why, if you remember the beginning of my statement was, I wish we actually had put down our money into the policy and then built up that policy. And then if we wanted to pay the house back or whatever the situation is, just a different way of looking at the way the cycling of that is.
Doing the same thing, but a different order.
Policy, but we went with the amount that we went with, So now, we're starting new policies and we're trying to, do it that way. But all the same, I would say, is, just, I think the more that one studies it, the easier it is to kind of explain it, And I think part of it is, what are the questions? It's still a loan, right? So are we paying that back? So that's the recycling, how, thinking about where are you going to pay, who are you paying first to pay that, which is why I was saying, how do you use the banking loan in combination of the insurance, who pays, how does that go is where the whole conversation piece of what we're going. So I would say maybe studying more on it and then trying to explain that piece that you're paying yourself really at the end of the day with a policy. And God forbid anything will happen, they only just take that cash value, that policy loan that you're out of the death benefit piece.
Right.
Of it, I think it's amazing,
It is. It is profound.
And great that, one gets it earlier and you get such a good death benefit when you're, younger. We're in the 40s and I'm like, we'll do it now. So just it's starting small and then, or starting where you can with the understanding with your partner where you can, I would say,
That's awesome. Yeah, thank you for sharing that. And I think that's something that we all are navigating because we're not even always sure if we're ready to move forward. And then we make decisions usually in conjunction with a spouse that sometimes there's one person in a family who's leading the financial decisions and sometimes they both are, and sometimes there's differences of opinion and sometimes they say whatever you want to do. So it's interesting that we're all given, you said start where you are. And I just want to point out that we're all given a different set of financial circumstances, a different personality, a different trajectory, a different life situation and setup. And yet at the same time, it's in our power to say, what can we do with what we've been given to the best of our ability today and continue to grow.
Right.
You're demonstrating that growth really well.
Thank you. Trying.
That's awesome. What would you say to somebody else? Maybe they were in a position where they were a business owner, or maybe they're a real estate investor, or maybe they're in a position where they have a job, but they're in a position where they say, I really want more control. I want more guarantees. I want to start on this cash flow trajectory. I'm learning about infinite banking. What would you say to somebody who was maybe on the fence with working with the money advantage specifically, and how they could maybe have clarity on knowing what to do there?
It's just really, honestly, just keeping on knowledge, soaking up. I like that, when I listen to each podcast, I hear terms and stuff. I'm like, okay, what do they mean by that? I go research again and see a little bit more.
Nice.
Just keep on researching and also understanding, how money in the system and the system goes as far as the fiat currency, or even just looking at how much interest rates that one pays within credit cards, or I'm not even talking mortgage, because I think, you know, especially if it's the asset mortgage, not your primary home, you know, I don't see that as a problem. But just looking for where these leakages are, and then also just really just taking the time to get the knowledge, but not too much time, because of you know, you're getting older. Yeah, just keep looking, keep searching for the information, and to validate your curiosity a little bit more. You know, that's what I would say. Honestly, you can't make that move until you feel comfortable about something. You know, so that's what I would say.
I love that you shared that. And I think that highlights something that's really important to us, is that it has to be your decision, or your personal decision. I mean, you are the owner of your financial life. It doesn't matter what somebody else might think is the best move for you. It's really about you doing what feels most authentic and genuine and real to you, to be able to help you accomplish your goals. And I hope that as somebody's listening, maybe they would be hearing that it's not just about everyone should do this one product or this one strategy. It's really about figuring out what you want to accomplish and being able to do that better.
Yeah, and you know, most definitely working with you guys really did help that, especially narrow down. It's like breaking down to the bare bones. Let's just see the whole full picture.
Oh, good.
And carefully, you know, that's one of the things I would say, if for nothing else, they should talk to you just because of that. For nothing else, break that down. And let's see,
awesome.
You know, let's see what's this, and you know, where's this, how's this going, how does this flow, what are your goals that you're wanting to accomplish at this point, and then the product comes out of it. That's what I like. But if one is just trying to really understand what infinite banking concept is, they really have to do a lot of research just on different, because I came to you guys already knowing there wasn't like, I came to you, I said, I want you to do this, you know.
You did.
And I think that piece is so important, you know, for people to kind of just at least get comfortable, you know, that on their own, you know. That's what I think, you know.
Yeah, well, that's awesome. And I appreciate you sharing that, because I think education and knowledge really is power, as you shared earlier. And we completely believe that as well. And it's being educated and having the knowledge. And one great place to start with that, I'm sure that you have read this as well. I think we talked about this, but Nelson Nash's Becoming Your Own Banker, kind of as the foundation and the starting point of really understanding infinite banking. We have resources as well on how to help I can't remember the exact title of it, but the Investor's Guide to Helping Your Money Do Two Things at the Same Time.
Yeah, I love that one. Yeah.
Oh, thank you. Thank you. But there's lots of books out on that as well, on infinite banking, privatized banking. And yes, absolutely do your research. I'm going to come back to 2 points that you made really quick before we sign off here. And one was, as you're paying yourself back, what's really interesting is that as you have a whole life insurance policy, you're in a position where you are earning interest. And so that's the thing that is most powerful, because you're not just paying interest on a loan, whether you're taking the loan from the bank or from your life insurance policy. You're not just paying interest. You're also earning interest. And that interest that you continue to earn through interest and dividends in the policy is growing with uninterrupted compound growth. And so that's really the main power, having that control of your capital in your control so that you can earn interest. That's being like the bank in your own position, because you are then increasing your wealth and not just
relying less and less on the bank and using them when you want to, if that's something. I think I love that piece. I think, I can't remember, it takes so much years to get off of that thinking, relying on the bank. Nelson had mentioned that in one of his it does take so long, you know. So if we could just gradually get a move, inching my way through there, you know. So
that's absolutely right. And what I think,
using them as the best you can, but you're in control of how you use it, you know?
Yes.
So, you know.
I also love that you mentioned taking a loan for the purpose of investing or putting that to work. You said, I don't see any problem with that. And I would agree. So when you take a liability, you're in a position of leverage, or most people call it debt. It's not really truly debt. You're in a position of taking a liability. You're putting that to productive use, or you're saying, how can I be a producer with this? How can I be as much of a steward as possible? How can I use this to earn money for me? That is completely different than credit card debt or consumer debt or something that is where you're just living your lifestyle on more money than you currently make. So two completely different instances of using a liability. One is for production and is actually wonderful to do that. So
yeah.
So thank you, Nnene, so much for being here
Thank
today.
you.
This has just been amazing. I love listening to you just share from your heart and your
Thank you.
perspective. Is there anything that we missed today? Anything that you want to share in closing?
No, I'm just really excited about working with you guys. I'm definitely excited about starting up some more policies. It's once you start, it really is something that you start wanting to kind of stockpile it that way. I'm really happy about everything. I'm really glad to be talking to you guys.
That's awesome. Well, we are so pleased to know you as well. And it's just been really exciting to get to share your story today and to be a part of your life and your journey and helping you accomplish your goals. And so I just wanted to take the moment to publicly thank you for trusting us in that way.
Oh, well, thank you. You guys are amazing. Make it easy. Make it easy for me to understand. I love it.
Well, you are an inspiring human, and we love working with people who have a place that they're going in their life, and we can just help your life be that much richer and better. So,
well, thank you. Thank you, Rachel. I appreciate that.
Excellent. Well, in closing, to all of our listeners, please remember, success leaves clues. So model the successful few, not the crowd, and build a life and business you love.